Hey, this is Laura Wiseman. Welcome to Level Up with Living Houston. Today we are going to be talking about bank statement loans if you are self-employed. So there's a lot of questions and different obstacles surrounding that topic. So I've got Dave, your mortgage guy, with me here today. And we're going to get into detail about what those are and how you can be successful with those.
Yeah, absolutely. If you guys have been watching us, you and I did a really strong, great podcast on self-employed, and we went over a ton of things. So we're not going to go over all of that same information today. That went over conventional loans, FHA, tax returns, all of that. What we're going over today is bank statement loans, which is kind of a secondary option if you're in that situation. So if you're self-employed, if you're a 1099 employee possibly, and you've been denied conventional loan routes, things like that because of tax returns, then this is really a route to look at.
Yeah.
So I wanted to go over kind of general stuff about these types of loans.
I have tons of questions about this because as a realtor, and I think this is kind of speaking to other realtors out there, we are blasted with emails all the time from lenders saying that there's all these different loan programs that exist.
Yep.
I don't know about everybody else, but I know I get these. I've got emails come through every day that say bank statement loans available, you can buy $1 million house with a bank statement loan and all this different stuff. And I see posts on social media about it and everything else. So I want to get some the truth behind that. Yeah,
let's talk about the truth. These programs have improved over time compared when they first came out, as in they're closing more often now.
Okay.
When they first came out, it was kind of a bit of a crapshoot. The closing ratio was anywhere between 20 to 40 to 60%, depending on the lender experience and things like that. A lot of lenders will also pitch it, but they may have not closed any. So they offer a product, but they don't have any experience of really closing that loan. So
now, sorry, I'm going to interrupt you a lot.
Yeah, please.
In this episode. When you go to a lender and you say, hey, I'm self-employed, I want to do a bank statement loan, and they start pitching it, they know, right? They know as they're talking that there is a low success rate on these.
Yeah, or at least not 100%, right?
Okay.
There's a crapshoot there that it may not close. And that's not even your first option. If any lender, without even doing any research, tries to put you in this type of loan, they're not doing your best interest. The first option is to try to do a conventional, an FHA, a VA. Why? One, it's safer that it's going to close. Your interest rate is going to be better. These programs tend to have anywhere between in the 4s and the 5s versus right now we're in the 3s, right? So this loan option is only if you cannot get approved for your regular type of loans.
Yeah.
Okay.
Which is what happens to self-employed people.
Yep.
A lot of times they've been that route. They've tried to get approved through everything else, and now this is their only option.
Right. And so know that there's a chance it may not get approved. Now, why would it not get approved compared to regular loans? Here's why. Every lender who's doing these loans is really brokering it to another company. So it's out of their control.
Okay.
And you're really leaving it up to the interpretation of that company to decide if they want to do it. And it doesn't follow standard guidelines like a FHA loan would.
Especially, so one of the things I've learned through firsthand experience is you go after a bank statement loan and they say you're pre-approved.
Right.
They say you're pre-approved for a bank statement loan. You get 3-4 weeks into it and then they say, never mind, you're not approved anymore.
Right. So we kind of jumped ahead. Let me explain to how it works.
Okay.
And I'm going to give a perfect example of where it backfires. So bank statement loans is based on your bank statements, kind of self-explanatory there a little bit.
Right.
And it's based on your deposits. Okay. They're going to go off of a 12 or 24-month average of those.
And
normally
it's personal or business?
It can be either one.
Okay.
So it could be personal or if it's business. If it's business, then there's going to be two ways they're going to address that. They're either going to take a calculation of your debts, making up a standard industry number, or one of them that I do a lot of is they'll allow us to do a profit and loss statement that you, the client, are preparing. Something to keep in mind there, right? So
they're about to look at they don't care so much about just what you're depositing. They want to see what you're profiting on this business.
Correct. Right. If it's business, if it's personal, they'll give you credit for that. Right. 100%. Now, Most of the time, it's going to be a 24-month average. Okay. Very rarely will they do 12, though sometimes case by case. Now, here's where it can be an issue. Well, I deposited $500,000 in deposits, so I make $500,000 a year. That's not how they look at it. They're going to take them and they're going to average them out. If there's an absurdly high deposit that's above average of what you're normally depositing, they're not going to give you credit for that.
They're going to throw that one out.
They're going to throw that one out.
Taken out of the mix.
Yep. They're going because they're going to assume that's a fluke. Whether or not it is, that's how they're going to look at it. So some of them that I've seen, not my personal loans, I've had no denials on this program. But as I talk to other companies, representatives, other loan officers, realtors, bad stories, that's a big issue that they run into is everybody looks at it and goes, oh man, you had $500,000 deposits. You qualify. Well, then they found that there was a $200,000 deposit. They take that out and now they don't qualify on $300,000 of income, right? I'm giving a general example.
Yeah, for sure.
But that for sure is probably the biggest, and I've asked a bunch of people, it's the biggest issue that they run into is that deposit is thrown out when it gets to underwriting, which is 3-4 weeks into it. These loans take longer.
Right.
So completely different than your normal type of loan in that regard.
So say you own a business and on a regular basis, for easy math, you typically bring in around 10 grand a month. And then 1 month you get one big order and you get a $30,000 order. That's not going to be factored in. They're going to remove that out of the equation.
Most likely, yes. Now, that goes back to where it's an underwriting case-by-case example. See, why I love conventional loans, VA, and everything else is it follows standard guidelines. The companies that do these, it's a little bit gray. They're really, truly deciding if they want to do it based on each scenario.
Okay.
And let's start with this. You know, you and I aren't doing this podcast so much to talk poorly on these loans. These loans are great. What you and I are trying to do is educate the consumer as much as possible. So if they go to lender X, Y, and Z and they're like, hey, man, you're pre-approved for this bank statement program. It's awesome. Go find a home. That client
you go
needs to know.
put $7 grand down on a house and you're ready to go. You're prepping your whole family to move and making all the necessary the accommodations so that you can move. And the next thing you know, I mean, I've had bank statement loans, clients with bank statement loans fall through like 2 days before closing. Correct.
So they need to know going into it, no matter how much that person makes them feel warm and fuzzy, based on that buyer's own research, this podcast, Googling, all of that, they know there's a chance it may not go through. You have to prepare yourself. So one example would be is give yourself a longer financing approval. And I always say this, have a longer financing approval in your contract, right? Because then if there was an issue, you have more time.
Right. And a realtor knows what that means.
Right.
And
exactly.
How to negotiate that.
Right. If you're pre-approved, and that's a beautiful point. If you're pre-approved for a bank statement program, your realtor needs to know that. Because they also, if they have any experience with this, knows it's a riskier loan to close.
Yeah.
If you just say, here's my letter, I'm good to go, and you are keeping information from your realtor, whether or not you think that's the right thing or wrong thing to do, you're probably jeopardizing your position because your realtor can't help you.
Right.
They don't know that.
Yeah.
They just see a letter and they say, okay, go make an offer.
And when a realtor writes an offer, puts a contract together on a house that somebody wants, there's an option period, but then there's also an additional, it almost functions like a financing option period that if they don't get financed within a certain amount of days, they can get their money back and get out.
Yep.
And that number is negotiable. So your realtor needs to know everything about your financing so that they make sure that all of those numbers are set up to protect the client.
Right, because here's a short story. If you get denied during financing period, you get back your earnest money check, right? Mm-hmm. If you're past that point, you have lost your earnest money check. It's very black and white. So you have to look out for your best interest when making those offers. The minimum down payment, is usually 10. Some situations based on credit score could be 20. So a little bit of a larger down payment. Look, the loans close. They can close, right?
Yeah, I've had clients that have done great with buying a house with bank statement loan.
Right.
But I've also had the ones that have fallen through. So you need to know how to navigate through the entire process, what pitfalls to look out for so you can be proactive. I'm real big on that.
Yep.
But I really want to know, if you can tell us if somebody's sitting here right now watching this that's self-employed and they're like, all right, I've been trying to get approved for a house. I really want to buy something, and I've gone every route and everybody's telling me I can't get approved. Maybe a bank statement loan is my only option. What do they do?
Yeah, look, if it's truly your only option, you've exhausted everything. I've looked at the tax returns. We've talked about amending. We've talked about reporting more income next year, or any of these things that we've exhausted everything. This is our only shot. Then going into it, that's your shot. And you just have to be safe.
The risks.
And the risk. And look, this is one thing that's super awesome about our podcast is this. We're not here blowing smoke and giving you a sales pitch.
Yeah.
Bank statement programs are great. Call us today, right? We're not doing that.
Not at all.
We're literally trying to tell you all the grimy back end stuff that people don't tell you. So as a consumer, you're educated. Because here's the truth of the matter. Many loan officers aren't going to have this conversation with you. Many realtors are not going to have this conversation. They're going to say, give me your letter. Let's go make an offer. And then when you get denied.
Yeah, because they're not worried about if you're losing your earnest money. All they know is that they took a risk to try to sell you that house because they want that commission. So for me, if you're really staying true to your fiduciary duty to the client, what I'm going to do is say, all right, you're saying you're pre-approved with a bank statement loan and you want to try to buy this $800,000 house. I'm not going to let you go put down all this earnest money when there's a good chance you could lose it.
Yep.
So if they give me the green light and they say, we don't care, we want to go for it, that's their decision, but I'm letting them know up front. And I'm just curious, if somebody wants to go the bank statement route, they need bank statements and what else? Or does that depend on the client?
Yeah, bank statements, credit report. They're going to have to be self-employed for 2 years or longer.
So the business has to have been in existence for 2 years?
Right.
Okay.
Correct. And I would say too, and those are pretty much the general, I mean, there's a debt to income ratio and kind of normal loan stuff after, but that's the bulk of what you need to know as a consumer. The other thing is this, if you find a loan officer who's pre-approved you for that, right? No matter who it is and what company, ask them, hey, how often do you do these loans, right? If they tell you, oh man, I do them all the time, they're lying. Right? They should be
100%.
They should be able to give you specific stories. The last one they closed, X, Y, and Z.
Agreed.
Right? Because if they don't give you those answers, this may be loan number one, right? Which is very scary.
Yeah.
If they do them a bunch or they have experience, they'll tell you stories. Like you and I tell stories on these all the time.
They're going to have specific stories with details and everything to go along with it.
Yep.
Most of the stories that accompany a bank statement loan program, most of those stories, somewhere along the line, that the whole process went to shit. Somewhere, somehow.
Yep.
Almost, 100% of the ones I've dealt with. So even the ones that I've dealt with that have closed, there was a hot mess in there somewhere. We had to navigate through some major obstacles.
No, I'll be honest with you. I refused to do them for probably 2 years because the quality and the closing ratio was so bad that I could not risk that for my client. I just couldn't do it. Yeah. I could not be the guy to say, hey, we're going to get you in a home, and then out of my control, the loan gets denied and they lose everything. Now, it has improved in the last couple months, 4, 5, 6 months, something like that. So my attitude is different moving forward. Yeah. But for the longest time, and even now, if I see a situation where I'm not getting the right answers from the underwriter on the situation, I'm not going to do a loan. I will not do it.
Good.
But no, this is a huge topic. Look, if you're self-employed and you've already exhausted everything else, number one, go back and listen to our podcast about self-employed people, because there is ways to get approved that you don't have to go this route.
Right.
Number one.
Right.
But if you've done all that, do your homework, prepare yourself, find the right realtor, find the right lender, obviously. And then know that there's always that chance something can come up. Yep. Do not bank on it.
Yeah. So if you're looking at a house and you're thinking about getting pre-approved and you need to go the bank statement route, get with a realtor, whether it's myself or another one, somebody like Dave, who we've been down this road, we know the risks involved, and we can help you navigate through all of that.
Absolutely.
So, thanks for joining us today, and we'll see you at the next one.